Hey traders, Nick here on Wednesday night. What happened today was pretty emotionally charged for a lot of people, I bet, and I want to put things into perspective. Let me start by summarizing what I want to say. What you saw here today in the middle of the day, in case you weren't watching, Wednesday went from really green, all-time highs to whoop, rug pull, and really red immediately. And what I would say is that this is normal price action. It feels abnormal for two reasons. One, we haven't had a red day since for 2 weeks, maybe. Look at the calendar, and maybe you can find that out. And also, we have weak hands. So it's not about that something free, there was a specific headline or not. Besides, before the market opened, we made statements to the fact that if we don't rally hard, and we didn't rally hard, we had a green morning, we could probably lose a little bit, and we lost a little bit more than a little bit. And I sent out a specific chart, and I'll refer to that in a minute. So let's go to the charts to put some sense into what happened here, and more importantly, to figure out how we will deal with this tomorrow. I'm starting with this sticker right here, which is the VIX, which represents, quote, fear, as they call it. It's not really that, but it does represent the concern from the market makers. You can see a sharp spike out of nowhere in the middle of the day. Well, first of all, luckily, we were long this thing by owning calls from yesterday. Wow, good timing, right? It wasn't luck. It was just logic. And the timing was almost perfect, but I don't always strive for that. That trade is up 20 to 25, maybe 30%. Last time I checked, it was up 25%. Although I may not label it a trade. If somebody needs insurance, they shouldn't book it. They need the insurance is working. If somebody didn't want the insurance, they were just shorting the market, boom, you got money. Now, in the last couple of weeks, you've noticed I've been sending bearish trades out. Some of them were under fire. Well, today they all worked out, I think, except one. So what would I do? I wouldn't stay short everything. Those bearish trades were set because I didn't find any bargains, right? So the mindset is what happens from here and how do I deal with the bearish trades? First things first, I wouldn't start shorting everything. This is not the beginning of the end, maybe, maybe not. We need more information, and that is my second chart. We are now looking at the SPY, the S&P's ETF. That's easy to understand for people. You can clearly see the drop from here to here today. So if you look left, it's almost exactly the same size as the rally on the headline from Powell. Powell opened the floodgates. He made a mistake with his statement. They were too dovish. They probably didn't mean to. And we just gave it back in size. So this is, quote, normal price action, although in a crazy way. When you have crazy spikes, you're going to have crazy dips. Those are called weak hands. Short-term profits it's the opposite of a short squeeze. If I just made 60% in the last 4 days, if I see 30% drop away from my pocket, I'm panicking to lock in the leftover. So then I'm underbidding my next person who's also trying to do the same. So we would take less and less and less and less, and those are weak hands. Okay. Now the important point is I just added these two lines, the circle and the hump. So the circle is where I want to see what happens in the next couple of days. Why? If we bounce from Wednesday, right at 467, what was the low? If we bounce and fail into 471 plus or minus $1, that's the circle, and we draw this arc, then we might be able to take in some more profits by falling towards 463, give or take a little bit. For the next couple of days, I'm going to be focused to see how high up the drop of today they can climb as a bounce. Like, can the bulls go above 472 and a half, 473 tomorrow? If they can, this drop was much ado about nothing, and the battle continues maybe on sideways for a little bit. But if they can't and they revert lower and they make a lower low, then we might have a few more bucks to lose, and all the shorts would work. Now, what do I do with the bearish trades that I've recently sent out? The VIX wasn't really a trade. If you didn't need the insurance, then yeah, it's a trade. Book it, you won. The QQQs, credit call spread that I recently sent worked. and they're more than 50% profitable. You can choose to leave them on. They're probably safe, if I were to use that word. This is the visual of the QQQ. Before the market opened, you guys had this chart in hands with the white line down here and the open air node above. And I verbalized it by saying, if we don't rally that much, we're going to fall this much, and we fell more than that much. So we were kind of prepared for that dip and short. The day I sent out a note about shorting the S&P, and I sent 2 different trades. I said you can do this, do that, or do both. I personally did only the top. I thought I did the bottom, but I didn't. But anyway, so that trade played out almost immediately. It was incredible timing. The IWM, which is the small cap, I recently sent out a short-term bearish trade, not a short-term, recently a bearish trade on the RUT, which is the same thing, the index, and that trade is playing out. It went from a little red to a pretty good green. I'm free to book it if I want to. I'm leaving mine on. In fact, I added to it this morning. Same trade, similar trade. So I'm just leaving mine on for now. Okay, so again, what happens in the next couple of days is what I really want to know, and nothing more, nothing less. I'm not going to make some philosophical decision that, oh, the PE is so high, we're downhill from here. We don't know if this is a long-term top. We need more information. I urge you not to panic into decisions, big global decisions, because of somebody's opinions out there. Let's just take it one line at a time. This is the only way to keep it without emotions. You think I don't get upset or happy when we get profits and losses? It felt awful for the last 2 weeks sending out bearish positions. I couldn't hardly find anything to go long. Everything is we are at all-time highs. I'm not going to put myself at risk and chase just because all the other people are chasing. It was wrong to do, and they're paying the price if they didn't at least book some profits. This is only one red day inside of a span of 2 weeks, I think. It's not the end of the world. It was painful for somebody not paying attention. Stick to the lines and logic. You can overcome emotion. I get emotional, but I try to, as much as I can, not to act on it. I can get upset without manifesting it with opening trades and booking trades whenever I don't need to. Lines, more like a mechanical way of managing your risk. Think like a machine. You'll do better in trading. If you need help with the lines, reach out. You have me all day, every day. If you're a member, you log into the live room. You say, Nick, I have 2 minutes. I can't stay. Can you help me with this? Boom, you get your answer live because I share my screen all day, every day for members. Also, on most Sundays, you have me for an hour and a half, Sunday morning, when I record the 3 videos for us reviewing all the tickers. I'm going to do a ticker review probably in the next couple of days because a lot of stocks have fallen into levels that may be tradable on the long side. We shall see. Oh, I also sent out, I'm pretty sure, to some of you a short idea on NVIDIA. If that's playing out for you, you might want to take it off. NVIDIA is the stock of the year in my opinion, and if I can get away shorting it twice this year and win, this will be the second time, I will take it off the table. It's a great company, so I don't want to pick a fight with it too long. All right, stay safe, stay calm, use lines on the charts to make better decisions.